All right, you ready to switch gears and hit a little rapid fire? Okay, type them in again. We're
Yes,
going to go over them again. I'll read them off if you want to go ahead and type in the symbols. We'll start out with
you got it.
AMBA, and I'll let you start that out.
Yeah, Amberella trying to break out here. Kind of a messy trend though. Tough to. I got to get that drawing tool you have, Noah. I downloaded it and I took it off. It's so much quicker than this. Um, Amberella's all right. It's all right. I mean, if I had to trade it here, I'd probably do a breakout over today's high. With the rest of the market being messy, I don't know. I'm not a big fan. I'd probably look for a stock that's trending a little better than this one personally. It's kind of neutral overall.
All right, next on the list is, let's see, we had GoPro, GPRO. I'll take that one. So GoPro finally got a little traction off of an earnings announcement. Now that's a surprise earnings announcement. Boom, you got an exuberant reaction. This is up and it's nearing a resistance point and slowing down a bit. I always, after an earnings announcement, look for the dust to settle. You can trade them directionally right after the event, but this is one of those things where, hey, the news is now 4 days old and you're into the run nearing resistance. You might have missed it. So probably wait for a pullback on that.
Agreed.
Okay, so next on the list is Home Depot.
Yeah, Home Depot. I think I might have had this on the bear list in one of the options reports. I really thought we'd get another leg lower after this breakdown on high volume, but you could see it's just defying gravity here. Just keep going up and up and up and up. I think this is a low risk bear trade if it reverses lower here. It's a nice low risk, high reward setup. Your problem is earnings out on the 15th, so you have to be the judge as to whether you can get in and out of that quick enough. But I would be bearish with a stop over resistance.
All right, so now we've got a new one, Fizz, Fizz. Not a ticker symbol I've ever looked at before. Not often that actually I take that back. Now that I see the name of the company, yeah, I've seen it before. It's got a slowing momentum pattern. It's a bullish trend, but it's got a slowing momentum pattern. It could be a breakout right there. But it's broken out above the century mark, 100, banging its head on 110. If it breaks out, you kind of have a cup and handle there, but it's in the context of slowing down. So 0 to 1 on bullishness on that. Okay, next one on the list is TWLO.
Twilio. Yeah, another one that just had earnings, kind of like GoPro. Unless you know how to trade gaps, it's tough to do anything the day of the earnings announcement, right? So usually you're waiting for a secondary setup, and so I think it's a good practice to maybe at the end of an earnings season or throughout the earnings season, the stocks that have big moves that you want to trade secondary setups, compile a watch list. If Twilio is going to continue this uptrend, it should pull back and give you a buy the dip setup, or maybe it consolidates and sets up a breakout. But you got to wait for a few more candles, I think, to have a good entry here. It looks bullish, but you're just waiting for a better setup, I think.
All right, next on the list is WTR. WTR. Okay, Aqua America. Got a bullish look to it. Just broke out of kind of a cup and handle base, nearing resistance out there at 34.41 and change. So that's the barrier for it. And I would say it's a little extended to attempt a breakout. I'd be watching it for it to either pop up and retest or to pull back and set up a better cup and handle for a breakout.
I agree.
All right, next on the list is Delta Airlines, DAL.
Yeah, Delta's got a little bear retracement here. Made a new pivot low below the moving averages, rallied up 3 days and rolled over. I mean, technically, you could say that triggered a swing sell or bear retracement setup today. So, yeah, as long as it stays below yesterday's high, I think you're bearish.
Absolutely, and nice little moving average crossover to confirm those. Next on the list is Netflix, NFLX.
Okay, so Netflix, I don't know if you saw this, Noah. So Disney came out with earnings after hours and reported that they are pulling all of their content off of Netflix, and Disney is now going to go into this streaming business. So because of that, Netflix is getting whacked after hours, which is oh so unfortunate because if you look at it on the daily chart, it had a nice little pullback there. So This is going to gap down tomorrow. Right now, after hours, it is trading at 173. It closed at 178, so it's down about $5, which is unfortunate. So I think you have to. I don't think you can trade this tomorrow. Doing analysis right now is irrelevant because it's going to gap down tomorrow, and that kind of resets the chart.
Yep.
I think you have to watch and see how tomorrow's down gap is accepted. Is it a buying opportunity? Does this get bought up immediately? Do traders use that as an excuse to sell? I don't know. I mean, it does have potential support down around 166. There's the gap fill at 164. It's in an overall uptrend, but anytime you throw a wrench into the chart with a gap like that, I think you got to wait for the dust to settle.
Well, I don't think I'll be canceling. I don't think I'll be canceling my subscription personally because of the lack of Disney content. But now I'm probably gonna have to buy Disney content too.
The interesting thing though, is it's like, well, how many people? Because Netflix has not had Disney for very long.
No.
I don't know how long, but how many people signed up for Netflix specifically because of that? And as a result, them revoking it, which it isn't until next year. But remember, the market reacts to that crap now, even though it's maybe scheduled for next year. But yeah, I would like to see like what percentage of Netflix's revenue actually comes from the fact that it has Disney content.
Oh yeah. So when people will
it'll
have time to proof that out, and they'll actually answer those questions for us here in the price chart, we'll figure out which way it's going. So rather than speculate, I'll watch for confirmation on those. So there we go. We're up against the clock, so we want to go ahead and wrap things up here. We appreciate y'all coming out as always, and again, hope you learn and you benefit from the content and the repetition, and of course just some of the fun commentary and insight. I always learn from each time I come to the Coaches Show. I always pick up something new. Today, I'm quite glad to know that Netflix and Disney are breaking up. I'm going to go post something about that on Facebook. But of course, always fun. Tyler, do you have any interesting thoughts or profound thoughts to take us out?
Profound. Well, you set it up that way, and I don't want to disappoint.
Too late. All right.
I will let you guys download this doc. I'll put it in the file share here in just 1 second. Okay. I don't know. I am interested here, Noah, to see if we finally wake up. I think that today's candle was the first real test we've seen in the last 2 weeks. I'm interested to see if we get follow through here. I have bullish positions on Netflix personally, so I'm hoping this gap gets bought up. Honestly, this is a good example here of why we diversify. It wasn't Netflix that had earnings; it was Disney. And who'd think that I got to get out of Netflix because Disney may pull their deal with them. I mean, it just completely comes out of left field. So stuff like this happens. Maybe it's a good thing. No, it's only gapping down $5. Could have been a lot worse, I suppose. But yeah, I mean that was just reiterated to me because I got some positions in this.
Well, then I'll summarize that and take us out. It's impossible to account for everything. There's still a Deutsche Bank analyst out there that downgraded a stock I once held, and I still have a vendetta against him. But you can't account for everything, whether it's an analyst or a random piece of news that affects a stock. We can't account for everything, so that's where we always come back to our primary risk management tools and our rules is position sizing and stop loss and exit strategies in advance. To account for, and then diversification. So we don't want to put all of our eggs in one basket. We want to have a reasonable amount of diversification and use those big, gorgeous, sexy brains you have sitting in your heads. This is where a little bit of extra thought and effort as you learn things and a little bit of discipline can make all the difference in the world.
Yes. I'm going to put this file share up, guys.